Hello, welcome to this webinar relating to the advanced package developed by ESS BIZTOOLS. And today's subject is the 52-week Business Enhancement System. I'm Peter Towers, Managing Director of ESS BIZTOOLS. I hope you're having a wonderful day. SMEs need real accounting services. Let's have a look at this. The annual set of accounts and an income tax return does not give your clients enough information to successfully manage their businesses. Businesses need far more. I'm going to give you some examples of looking at the bigger end of town, larger corporations, even larger charities and not-for-profits. All have meaningful accounting input throughout the year, not just once or twice a year, when the prime purpose, from your point of view, is to prepare the income tax return. Who gives your client advice on financial and commercial matters if you're only talking to them once or twice a year, and then it's only about taxation? So SMEs, I think, should be receiving services on a similar but scaled down basis to what bigger companies receive. Because accountants and chief financial officers who are engaged by larger corporations, public companies, even large charities and not-for-profits, do far more work than just prepare the annual tax return. In fact, the actual tax return process may well be outsourced to a firm like yours to do, because those accountants and chief financial officers are concentrating on day-to-day business management issues and advice to the CEO and to the other members of the leadership team, not just worrying about taxation matters. The chief financial officer is a member of the leadership team in virtually every business that I've ever had anything to do with. And the CEO of a larger business receives advice from the leadership team, and there could be 10 plus people as members of that, covering marketing, sales, production, purchasing, buildings and equipment, vehicles, all those sorts of things. They're all key leadership roles in businesses. And larger businesses receive data on a daily, weekly, and monthly basis. So where to start? First of all, I'd like to ask you, who gives your client advice? Who do they turn to? I was the CEO, the CFO, sorry, I've just promoted myself, didn't I? The CFO of a listed public company. And some days I'd spend all day in consultation with the CEO, reviewing a whole range of issues, mainly what ifs. Could we change it and do it this way? What would that cost us? What would be the benefits? What's the risk from doing that? All these types of questions. No one will ever convince me it's only CEOs of larger companies that worry about these things. And these people have got 10, 12 and more key leadership team advisors sitting around them, making input all the time. And in their own organisation, they may have another 20 top-level management people or more. The CEO of a SME has very little of this input. They may have one or two leadership team members they can get input from, but not many more. They really need the input of their accountant wearing a chief financial officer's hat. So where do you start? I think the first thing is that you find out more about your client's business operations, because I can assure you that for the vast majority of accounting firms, you do not know everything about your client's affairs just from preparing the annual accounts and income tax returns. Why? Because it wasn't part of your brief in any case. to analyse the internal control system, to analyse the risks that the business may be encountering because of where its supply chains are situated. It could be in part of the world that's now caught up in wars and conflicts, and therefore supply might be doubtful at times. So what's the alternative? Where will your client seek alternative products from? What's the cost variance likely to be? What's the effect going to be on profitability? What's the stock holding requirements going to be? Because if your client needs to shift from getting supplied from the current source to somewhere else, it may mean that instead of holding stock for 2 months, they need to hold stock for 4 months or longer. What's that going to do to the cash flow forecast? These are the type of questions that come up that you need to have a full understanding. So where we start with is a due diligence review, which I think you should revisit once a year or more often if there's been some problems. If there's been an actual case emerge where there's been problems with the internal control system, should undertake the review again then. Because you need to understand your clients' affairs 1 inch wide, but a mile deep. You really need to understand digging right down as to how it operates. Instead of a mile wide, but only 1 inch deep. You need to know more about your client's affairs. And you start that by undertaking an annual due diligence review. So I think you need to know far more about your client's affairs to be able to do that. And then you move on to the business plan. The business plan's a very important document. And it should be prepared by the leadership team, obviously with your client or your CEO of the company, and your involvement, whoever from your firm is the chief financial officer nominee for your client. It's important that the leadership team has ownership of the business plan because they're the people that are given the responsibility of implementing it. Now, you might be part of that in that process, your firm, because you're acting as the CFOs, but it's going to be the other people primarily involved, marketing, sales, purchasing, etc. The CEO. They're the people that are really tasked with implementing the business plan. Therefore, you need to get their honest input into what's going to be undertaken in the business. And the next function that we need to go into in getting the stage set to move into the 52-week Business Enhancement System is predictive accounting reports. Now, this covers budgets for each business operation, not just all consolidated into one budget, because you lose track. It's very difficult to undertake detailed analysis of actual performance versus budget. Break it down into its individual components. And incidentally, that's the way the monthly financial accounts should also be prepared on each individual business unit. You can consolidate it at the end of the year or every month if you want to into a consolidated report. But in the first instance, to get some allocation of responsibility, you need to break it down into its individual components. And then the key drivers, they're vital. So what are they? Inventory, so that you can track the inventory levels. I said before, you may have been budgeting for 2 months stock holdings, but now because you've got to source supplies from somewhere else and shipping's a bit more irregular, you may have to go to 4 months stock holding. That needs to be monitored. What's the effect on the cash flow going to be? Debtors. What's the debtors' days outstanding? A crucial number that should be being looked at, I think, every week, but most definitely every month. Creditors' days outstanding is also another important part of the analysis of key drivers. Because when you're preparing budgets and cash flow forecasts, it's important that you undertake an audit nearly at the end of the process to make sure that the figures that are coming out in the key drivers are realistic. I've seen situations where someone's come to me with a budget and cash flow forecast already prepared, looks very nice. Nice cover and nice typing and nice spreadsheets. And I always ask for the most recent financial accounts. And the first thing I calculate is, because it's virtually never shown, is what is the debtors' days outstanding according to the financial accounts? And what is the creditors' days outstanding? And what's the inventory levels on, as a percentage of on a day's basis? And then do your own calculations on what's shown in the budgets and cash flows. And I'll tell you what you might find. That you'll find that the budgets and the cash flow forecasts are saying that debtors' days outstanding is going to be 35 days. But when you analyse the most recent financial accounts, you find that debtors' days outstanding are 63 days. Now, there's no way that I know of where someone can go from 63 days, debtors' days outstanding, to 35 days outstanding, and then hold it for the whole year. So immediately you have a query, because what that will mean is the forecasts are understating the amount of cash, financial arrangements that this business needs. I've also seen where creditors' days outstanding in the financial accounts are around 31, 32 days. But when the forecasts are being done in the balance sheet, someone's assumed that it will be 60 days. And again, that's not practical. And what that means is the business will run out of money. Recently, the CEO of MYOB, Paul Robson, produced a report of what MYOB had analysed financial performance of SMEs. And he wrote an article which the Financial Review published in February. And he indicated that the majority of SMEs that they interviewed had no idea of the relationship between creditors and cash flow and debtors and cash flow. This is vital. I think you need to understand that your clients might not understand this. They probably don't. You need to sit down and communicate with them so that they understand how these things link. Then, of course, we've got the cash flow forecast and the projected balance sheet. And the projected balance sheet's purpose, other than making sure the whole process balances, which is a bit accounting-wise, isn't it? But is to be able to be the storyteller, to say to your clients, well, as long as you implement everything that we've got in this, this is what your position will be like in 2, 3, 5 years' time. Are they going to be happy with that? Do they want to make improvements? It might highlight that they're going to need some additional funding. That might indicate that they need to look at borrowing more money if they've got assets they can offer as security, or looking to raise capital as a crowdsourced funding equity raising company. Is their turnover under $25 million? That's the first key question. If it is, they might look at that. So you could start talking to your clients about what can be the benefits from raising capital, because it's all part of creation of wealth, not owning 100%. So the predictive financial accounts are the financial interpretation of the business plan. This is very important. Now, the 52-week business advisory system is based on the framework that I've already discussed, those key items of getting them right, because they're very important for the foundations of what you then want to undertake during the year. Most certainly, we're saying the ad hoc, every so often have a look at the financial accounts and leave the client to their own devices, in effect, for virtually a 12-month period. And then at some stage after that, which might be 4, 5, 6, 8 months, in some cases 12 months, that you will prepare a set of financial accounts and an income tax return for them that is not helping your clients run effective businesses. And if that's the only involvement they are receiving from an accountant, they are not receiving services that help them run better businesses. And this is what ESS BizTools is all about. We are trying to assist you to be able to deliver these services to your SME clients. So it starts with a daily report. When I was a younger accountant, daily reports were very important. Then they seemed to lose their focus because everyone thought computers were going to do everything. Well, they don't. There needs to be some human reaction. And the daily report can be a very simple process. It might show the bank balance, the sales yesterday, the debtors balance, the yield percentage. If yield's important in your client's business activities, the gross profit percentage if your business involves sales, of the average sale yesterday, large payments that have to be made in the next 7 days. And there will be information that your client, when you sit down and have this conversation with them, give them this example and say, what else would you like to know on a daily basis? And then you can make sure that that's prepared. Now, we're not saying your accounting firm's got to do this. I'm suggesting that you set up the system, train someone within the client staff and have them prepare it, but monitor that it's happening. Make sure you're on the distribution list for the receipt of that daily report so you can look at it. And if anything jumps out at you, you should immediately be acting as the CFO and getting on the phone to your client and talking it through. Because this is the first opportunity to correct something that's gone wrong. If the gross profit percentage is expected to be 37% and it's come in at 21%, there is a problem. Now, it might be that someone's mucked up the pricing that was put into the cash register or whatever. Doesn't matter. It needs to be investigated. So if there is a problem, it can be fixed for the next day's trade. We've already lost the current day. So it happened on Monday. It's now Wednesday. So Tuesday is the day we're looking at all this. And hopefully we're going to fix it soon. Okay, the weekly report. Weekly reports are given in larger businesses that are running business activities all over Australia. And not many SMEs do it. So it's a weekly performance and profitability report. It shows the key performance indicators and business metrics. And importantly, as I said before, it's a profitability report. How did this activity go last week? Now, this calculation should be getting made on Monday or Tuesday of the week end. So if there's a problem, it's been raised immediately. What happens at present with your client? If they have a big problem emerge in their business, do they pick it up? In most cases, no. Look at the failure rate of businesses. It's going up. Look at the report that Paul Robson, the CEO of MYOB, wrote, where he indicated that the businesses that MYOB analysed did not understand debtors days outstanding, had no idea of the linkage between what the payment terms to suppliers were going to be and the cash flow position of the business. And that was basically why they ran out of money. Hadn't provided for payments to the tax office. And then we got the monthly reports. Now, we're not indicating in any way to you what software you used to producing the reports, either by your client or in your firm. That's up to you. But it's the use of that information that's vital. So we think there should be a profit and loss account for each business activity, just as you had each business activity treated in the budgets. The key performance indicators and business metrics are very important. Indeed, some of your clients' managers will be far more interested in understanding their KPIs and business metrics than anything else, because they have established in their minds what the yield should be from various processes, what the average sale price should be, what the labour to turnover percentage should be. And if they see that it's variable, they will react. But they need the data and they need to know that it's accurate. That's your role, to make sure the system's properly put in place. Comparison of the actual results to the budget forecast is a vital bit of information because, once again, if there is a problem, it can immediately be fixed. It doesn't go on for months and months and months until we get to the end of the financial year. When you're sitting down with the client, you've got the annual accounts in front of you and you say, oh, results weren't as good this year. Last year you had 36% gross profit percentage. This year it's come in at 28%. Well, 8% on the turnover, which might be $2 million, there's $160,000 that's disappeared somewhere. Why? Where did it go? What caused that? That's a bit late to be undertaking a detailed review months after the end of the financial year, isn't it? Unfortunately, that's a service a lot of SMEs are receiving. I envisage then that you would prepare a financial report for submission to the Board of Directors or Board of Advice meetings. So this is a rhythm of financial analysis. It goes on daily, weekly, monthly, daily, weekly, monthly. 12 installments of that process a year. Some people like 13 because they break the year into 13 4-week periods. If you want to do that, that's okay. It takes a bit more training with people. They tend to deal then with month 1, month 2, or period 1, 2, 3, 4 through to 13. That's up to you. But this whole process will encourage more questions from your clients on strategies and directions and decisions that the CEO has to make. There'll be what if type questions. What if we did this? What if we changed it to such and such? That's you then offering real accounting and commercial advice to your clients. So the taxation returns result with the 52-week Business Enhancement System. The tax return, I think, is the byproduct of the ongoing processes throughout the year. It's not the most important thing that's been undertaken. The client receives commercial information that assists in the planning and direction of the business throughout the year, daily, weekly, monthly. Your team members are involved in interesting and challenging work, which will assist in overcoming talent attraction and talent retention problems that accountants all over Australia are indicating are a major concern. The younger generation want to do some exciting work, some interesting work, not just taxation returns. They know the information is completely out of date when it comes to assisting the client to run their business. So if you need assistance as a subscriber, member of ESS BIZTOOLS, please contact us. We can offer you additional services to assist. But in the first instance, just give us a phone call or send me an email, peter@essbiztools.com.au. And we might be able to give you the answer or suggestions as to how to solve a particular problem straight away. Thank you very much for your support of ESS BIZTOOLS. If you have any questions on any of the aspects that I've raised in this training webinar, please don't hesitate to contact me. Stay safe. Have a great day. Goodbye. And thank you very much. And I will talk to you again in a few weeks' time in the next training webinar. Thank you.